Is Ripple secretly setting up the biggest power play in finance? What if Tether collapses, XRP gets an ETF, and Ripple stablecoins become the backbone of global money? Would XRP finally explode, or is it all smoke and mirrors? Let's dig in.
You're watching WealthyWise, the channel where we break down the biggest moves in crypto and finance. And if you're new, don't forget to subscribe and drop your thoughts in the comments. Your questions shape what we cover next. Let's dive straight into today's Q&A.
Let's start with a great one. Why does the US government seem hesitant to let Tether grow, while Ripple's RLUSD stablecoin is being positioned to rise? That's a sharp one. Here's the truth. Washington doesn't trust Tether. Many regulators see it as tied to offshore or even Chinese capital. That alone makes them cautious. Instead, US-backed stablecoins like USDC from Circle and Ripple's RLUSD are seen as more aligned with American interests. Now zoom out. The stablecoin market is already about $270 billion. Analysts project it could hit $2.8 trillion within 3 years, a 10 times jump. And in that race, RLUSD has a serious shot. Ripple isn't just making another dollar-pegged coin. By tying RLUSD with XRP in remittance and foreign exchange, they're offering something USDC or Tether can't, a built-in bridge currency. Think about it. A euro-backed stablecoin can't easily convert to a yen-backed stablecoin without friction. But if XRP is the middle layer, those trades happen instantly with minimal cost. That's Ripple's two-track strategy: stablecoin rails plus XRP as the universal bridge. Next question people keep sending. What happens if an XRP spot ETF is approved? Will it really bring in institutional money like Bitcoins did? This is the million-dollar or maybe billion-dollar question. ETFs matter because they solve 3 pain points institutions face: custody risk, they need to worry about storing private keys; accounting headaches, ETFs slot neatly into existing balance sheets; tax efficiency, clearer reporting rules compared to raw crypto. We saw it with Bitcoin. Once the ETF was approved, institutions no longer had to touch BTC directly, and in the months after, Bitcoin's price surged over 130%. Ethereum's ETF approval had a rockier start. Its price dipped first due to Grayscale Trust outflows, but even ETH has clawed back gains. So with XRP, expect a similar cycle. A possible dip first as trust products unwind, followed by strong inflows. Analysts project $4 to $8 billion flowing into an XRP ETF within the first year. For context, that's more than some entire altcoin ecosystems combined. Now here's where expansion is key. Imagine banks and corporates adding XRP exposure through ETFs as part of their treasury management. Suddenly, what feels niche becomes mainstream. All right, if ETFs are the door, here comes the next question. If BlackRock and Wall Street already executed this playbook with Bitcoin, what's stopping them from doing the same with XRP? Nothing. That's the scary part, or exciting, depending on where you stand. The pattern is familiar. Mock the asset, call it a scam, drive retail out through fear and doubt, then accumulate quietly. Then push for ETF approval, bring in institutions, and ride the price higher under a new narrative of legitimacy. This isn't theory. It's exactly what happened with Bitcoin. Headlines went from Ponzi scheme to digital gold the moment BlackRock launched an ETF. XRP could be next. The question is not if Wall Street will run the playbook, but when. Before we continue, let me quickly spotlight a project reshaping OTC and pre-market trading: Unic. Unic already boasts over $1 billion in trading volume. What makes it different? Features like pre-order OTC, points market, and instant cash-out orders. This isn't financial advice, but if you want to catch tokens before TGE and trade with just 5% collateral, Unic is worth checking out. Link in the description. Back to the question, won't stablecoins like RLUSD actually reduce XRP's role? On the surface, maybe, but in reality, XRP and RLUSD are designed as a two-track system. RLUSD acts as a compliant, US regulated stablecoin. XRP, meanwhile, becomes the bridge, the asset that swaps value across different stablecoins and fiat systems. Here's why that matters. If a US bank needs to send yen or euros, normally they'd have to pre-fund accounts in those currencies. That ties up huge amounts of capital. With XRP as the bridge, they don't need that. Liquidity unlocks instantly. For example, a bank in Japan wants to pay a supplier in Brazil. Using only stablecoins, both sides would need to hold reserves in multiple currencies. With XRP in the middle, they don't. XRP instantly converts yen to real via RLUSD or another stable. That's why institutions are starting to prefer this setup. Less capital tied up, more efficiency. This is where Ripple's design shines. Stablecoins for local compliance, XRP for global interoperability. Together, they cover both fronts. Next up, why are Coinbase XRP balances dropping? And what does it mean that BlackRock is now offering XRP to institutional clients? Two likely reasons. First, whales and institutions are moving XRP off exchanges into cold storage for security. That suggests long-term conviction. Second, OTC desks. Institutions often buy large blocks of XRP through private channels. To settle those trades, exchanges pull liquidity off their order books. As for BlackRock offering XRP, that's huge. It signals institutions are comfortable with Ripple's legal clarity and its new institution-friendly features, like permissioned access on the XRP ledger. Combined with Ripple's new patent, protecting institutions from volatility during remittance flows, the demand curve is shifting upward. Here's one I love. How exactly has Ripple innovated beyond traditional finance? Let's compare. SWIFT is basically a messaging network, not a payment system. Transfers take days, cost 5 to 10% in fees, and require banks to pre-fund nostro vostro accounts around the globe. That's trillions locked away, doing nothing. Ripple's network, payments settle in 3 seconds, fees are near zero, and XRP acts as a bridge so banks don't need to pre-hold dozens of currencies. It's like replacing fax machines with instant messaging, and Ripple's tech stack keeps expanding. XCurrent for cross-border settlement, XRapid for liquidity on demand, XVIA for enterprise integration, Interledger Protocol for cross-network compatibility. No other project has this breadth. And now with RLUSD stablecoin plus XRP bridge, Ripple is positioned as both compliant and scalable. Which brings us to the next high question. What's Ripple's role in CBDCs? Already, about a dozen countries are working with Ripple on CBDC pilots. These aren't big economies like the US or China, but mid-sized nations that can't afford to build CBDCs from scratch. Ripple offers a turnkey solution. For them, it's cheaper, faster, and already proven. And since Ripple's CBDC platform plugs directly into the XRP ledger, those CBDCs gain instant interoperability. That means more usage for XRP as the bridge asset. Another sharp one. What's XRP's biggest weakness investors should be aware of? It's supply. Yes, supply matters. Ripple released 100 billion XRP at inception, and half is still tied up in escrow. Each month, about 1 billion unlocks, with unsold amounts relocked. This keeps steady liquidity, but caps sudden shocks. Short term, it means XRP may not moon overnight. But here's the kicker. Once escrow winds down in 7 to 8 years, XRP turns deflationary. Transaction fees are burned permanently, shrinking supply. That flips the tokenomics from inflationary to scarce, a rare trait among top cryptos. Combine that with institutional adoption, and you've got a recipe for long-term upside. Now, the one everyone's waiting for. What price can XRP realistically hit? Most models forecast $3 to $5 by 2025, with some optimistic calls pushing $10 if ETF inflows are strong. Longer term, 5-year projections range from $10 to $20, with extreme outliers suggesting $50 if Ripple fully displaces SWIFT. The truth? It depends entirely on adoption. If institutions flow in, if ETFs drive demand, and if stablecoins rely on XRP as the bridge, then those numbers aren't fantasy. But without adoption, XRP stays capped. Quick reminder, if you're following XRP's narrative, you'll also want to watch projects that let you act before tokens even hit exchanges. That's what Unich does with pre-market OTC. Users can trade tokens before TGE, cash out early, and even avoid post-listing dumps. With 500K plus followers and integrations with partners like Superteam and Script Network, Unich is positioning itself as a new layer in crypto trading, not financial advice. But check the link in the description. So what did we learn today? Tether's decline opens the door for Ripple's RLUSD. An XRP ETF could bring billions in institutional inflows. BlackRock has already shown the playbook with Bitcoin, and they might run the same script with XRP. The stablecoin and CBDC narratives are colliding, and Ripple has positioned XRP as the bridge asset of choice. Now the big question is yours. Do you think XRP can truly become the backbone of global liquidity? Or will Wall Street keep pulling the strings? Drop your thoughts in the comments, hit subscribe for more deep dives, and I'll see you in the next WealthyWise video.